Bully with boosted profits, and I wanted to share this quick video with you. I'm trying to get the word out to as many people as possible that we have a narrow one-time window in time to take advantage of a tax loophole that was created by the 2017 tax law reform changes and how this can benefit you and your clients. So let's jump right in. As we know, the impact for the Tax Reform Act, the primary provision of it, among many, was a reduction in the corporate tax rate from 35% to 21%. So obviously income is taxed at a lower rate, which is great for business, but one downside for business is that the tax deductions you take now have much lesser bang for their buck than they used to. They're, you don't get as much when you take a tax deduction to write off against income. So understanding that, let's talk about how about what the loophole is and how we can take advantage of that loophole, this special opportunity, using a powerful tax remediation strategy called cost segregation. And cost segregation involves how you depreciate your property. Now, typically, as a matter of fact, all property is valued based on a 39-year cost life. And so most people who do not use cost segregation use traditional straight line depreciation, which means they write off the same amount every year, 1/39th of the value of their property against their income when filing taxes as a deduction. If they do this, they're missing the boat big time. All companies that have property should consider cost segregation because cost segregation identifies the components of property that are eligible for accelerated depreciation, which, when implemented, creates a large, and I mean very large, one-time immediate cash flow, which is a huge boost to the business. This is a completely legal process, fully supported by the IRS. The whole intent of using cost segregation, as approved by the government, was to stimulate the economy, to give businesses a shot in the arm, particularly when they're starting out, to get them on the road to profitability quickly. So it's designed to help companies. Companies need to take advantage of it. So what are the best industries that qualify for cost segregation? Basically, almost any industry qualifies. The top 5 in my book that have the most benefits from cost segregation are auto dealerships, manufacturing, commercial real estate, hotels, construction, architecture, and engineering. However, let's not forget medical facilities, professional services like doctors and lawyers and dentists, restaurants, rental property owners, basically any business that has large assets in buildings, plant, and equipment in the $750,000 value mark or greater should consider cost segregation. It's legal and it's powerful and it's profitable. So let's just look over a scenario just to give you an idea of what kind of money we're talking about here. Let's use commercial real estate as an example. So somebody who owns commercial real estate valued at $4 million, including renovations, can, based on 2017 tax rates, if they implement cost segregation, they would get a one-time savings, a one-time cash flow boost between roughly 240K to 300K. That is not trivial. All right, it's just a tax computation difference, and it's a huge savings difference. Now, of course, it depends on factors like how the building is used, but that's why I gave you a range here. It doesn't matter if the building is new or if the building was purchased 10 years ago, you still can implement cost segregation. And it can be exercised by a new owner, even if the previous owner had already done cost segregation, because the clock gets reset when the property changes hands. All right, so if this is such a great strategy, why doesn't everyone use it? That's a great question. There are a lot of reasons why, but we find some of the reasons are that companies and their tax professionals are either unaware of cost segregation, they're unaware that they qualify for cost segregation, or they may not have the bandwidth to implement because it does require an engineering study to evaluate the different components of a property and a building to determine what part of a building can be accelerated in depreciation, and that's not typically something in the wheelhouse of a tax professional. So, why is this the best time in the history to implement cost segregation? It's always been a good time. It always provides you a cash flow boost, and it will continue to provide a cash flow boost into the future because this cost segregation has now been approved and it's permanent. However, now is the best time in history, and this is why. When you implement cost segregation using the 2017 tax rate, which is 35%, That is a 40% higher cash flow than using cost segregation at the 2018 rate. I hope that makes sense. Basically, you're writing off 40% more on the same property just because the tax law changed. That's the only thing that changed. The building didn't change, but you're writing off 40% more. That's going to be immediately flow down to your bottom line, okay? Just by the timing of when you implement this. So right now, as I do this video, February 2018, businesses are currently preparing taxes based on their 2017 activity. So this is why the timing is critical. In order to capitalize on this loophole and the tax rate changes, cost segregation must be implemented into the 2017 tax computation because of the rates. If you wait until 2018 or after, you will lose this 40% forever. It's a lost opportunity. You've got to do it for 2017. Property and renovations to qualify for this must be on the books by the end of 2017. Again, the age of the property is not a factor, and anytime a property changes hands, the clock is reset. We talked about that already. Now, in the example I just gave you, in the scenario of the $4 million building, that using cost segregation on the 2017 tax rate will get you around 100K more in tax savings directly to the bottom line than waiting until 2018 and the 40% change. That is not peanuts, ladies and gentlemen. That is just based on the timing of when you implement this. That's why this window is very important. All right? So my conclusion is every U.S. business should not file 2017 taxes without considering the impact of cost segregation. And since we're right now in the window of doing taxes, we got to get the word out, because once this window is passed, the opportunity will be gone forever, as in forever. You will probably have existing clients or friends who are unaware of this tax loophole one time. So I'm encouraging you to get the word out. Get the word out, especially to your tax professionals that you know, and make sure they are aware of this limited time where this is applicable, and have them contact their experts in the cost segregation field to at least determine if it's worthwhile in their particular situation, or if they've already done it or not. But at least they need to be aware of this so that they don't miss the opportunity. Now, for some reason, if you need help, for any reason, if you need help with cost segregation or if you have additional questions, we can certainly help. My company has been performing cost segregation studies and other tax remediation strategies for over 17 years. Cost segregation happens to be the strategy that really leverages this window. We can estimate potential savings for any client in less than 13 minutes with a few questions. There's absolutely zero risk to the business owner. Once we determine what the potential savings are, we only charge a small fee based on a contingency basis, only based on the amount of actual savings generated, which in theory the client would never have had we not performed the study to begin with. So there's absolutely no risk. There's no upfront money, all contingency based. And the other thing is we work hand in hand with the client's tax professional, so it's full disclosure. We're not trying to hide anything. We want to make sure they're fully aware of what we're doing and they approve. Now, how does this help you as somebody who has clients, as somebody who knows people who knows business owners? Well, this is a huge potential value added service to your clients. You can imagine if you can provide us to step in and give them 6 figures of cash flow, that's a huge potential value added service. This is a significant differentiator from any of your competitors. It gets you in the door when you're trying to sell your service. Imagine how this could separate you from the people that you're being compared to. This will assist in price negotiations. If you have past clients, you should contact them all and stay relevant to past clients, get more business, notify them about this narrow time window that, hey, don't miss this opportunity. If you have current clients, get a big jump on competitors by offering them cash back. This will eliminate commission reduction if you get paid on a commission basis and you're constantly getting squeezed by your clients. If you can generate a big cash flow like this, they're going to be less likely to try to squeeze what they pay you on your commission. All right. Future clients. It's estimated that 18 million businesses will be sold, handed down, or closed in the next 8 to 10 years. So that is a lot of potential properties. Establish relationships with the owners of those properties before that happens. Get your foot in the door. Tell them how they can jump on this cash flow boost, one time opportunity. So I am excited. I am very passionate about having people pay less taxes than they need to. I want you to help me get the word out. If you have any questions or if you'd like to talk, I would love to work with you and your clients for a win-win scenario here. Here's my contact information. Give me an email at Murray at Boosted Profits, or use this link to schedule a call. Get on my calendar and let's talk of how we can brainstorm this for a win-win situation. I've enjoyed sharing this with you. I hope you can understand the time sensitivity of this. Don't let 2017 pass without considering cost segregation. I look forward to hearing from you. Thanks for listening. This is Murray Beaulieu, Boosted Profits.